All right, so we discussed a little bit about global standards, which are incredibly important to making the efficiency of our industry work. But one thing that is on the minds of a lot of entrepreneurs is when I make all of this money through my crypto gains, how do I render that more efficient or at least be in the right place at the right time? So I think that's the topic of the conversation that Thomas is about to moderate here today around tax efficiency in Web3. So let's welcome Thomas and the rest of the panelists onto the stage, and maybe we can give them a round of applause so that they can hurry up. Thank you.
Sit here.
So, thank you very much for these kind words. Welcome to today's panel on tax efficiency in Web3. Let's look back maybe 3 to 4 years. We had always a tax panel here at the Crypto Valley conference. And we always discussed current tax issues, always issues. But now, so that there was the treatment of ICOs, native tokens, staking, some banking regulations, VAT registration. And I can today happily announce we don't have any issues anymore. We don't have any issues anymore. At least according to my honest opinion, we have solved most of them during the last 1 to 2 years. We have a lot of legal certainty in the tax environment here in Switzerland. And that's why I told you that we have a good mood panel. So that's a good mood panel now. And I think it's the first time in history that a tax panel is a good mood panel. So we will discuss the legal certainty we gained. We will discuss the collaboration with the tax authorities as a strength of Switzerland. And certainly we need to highlight that tax efficiency is not meant tax avoidance, but it's meant legal certainty, compliance, and planning opportunities. So welcome to today's Good Mood panel on tax efficiency in Web3. Olga, Guido, and Allison, maybe you introduce yourself very shortly about your person, your company, and why is tax relevant for your role?
Yeah, sure. So, good morning, everyone. My name is Olga. I'm chair of Western chapter of Crypto Valley Association based in Lausanne, and I'm also legal and tax advisor for many companies, including blockchain related and digital assets related. So, thank you.
Good morning, everyone. My name is Guido Hueppin. I'm the CFO of Sygnum Bank. There, obviously, tax is one of the key items on our side in the accounting world, especially for the legal entity, but also for clients. So that's why it's always a hot topic when we have anything to discuss there.
Good morning, everyone. I am pleased to be part of the Good Mood panel. I like the way you phrased that. My name is Allison Fromm. I'm the CFO for a foundation, a Swiss foundation supporting Luxo, which is a layer 1 blockchain. In my previous life, I was a corporate banker in the US, and really pleased to talk about the fascinating topic of tax efficiency.
Excellent. Maybe Olga, can you provide us with a short kind of overview about the Swiss tax system, which taxes are relevant for Web3 projects, and what topics are relevant for these projects?
Yeah, thank you. I think to begin with, what is important, and as you mentioned, has been discussed many times here, what is important is token classification, and basically being payment, utility, or asset tokens, and the token classification shapes the whole the tax treatment furthermore. And again, depends on the setup. It could be different outcomes. Of course, the biggest effect, of course, is corporate income tax, as for any other business, and for token related for DLT business, basically net revenue means deducted with taking into consideration deductible expenses, net profit from token related revenue or services or rewards. This net profit is taxable for corporate income tax perspective. Another aspect to consider is VAT. And again, this to large extent depends on the classification of the tokens, and that's almost always the case of utility tokens. But here, what is interesting, in particular in Switzerland, that, for example, Bitcoin mining activity is considered as vatable in Switzerland, which is not the case for other countries. For example, in Sweden, it's it clearly says that Bitcoin mining activity is not vatable, and this is a huge advantage for Swiss-based companies because there's an opportunity to deduct VAT on energy costs. Another tax is withholding tax, and this tax can be relevant for income derived from investment tokens with participation rights. This can be relevant. But another type of income, for example, staking, which is way more maybe common type of the income, the staking rewards is not considered from the Swiss perspective, is not considered like as interest or yield. Therefore, the staking rewards are not subject to withholding tax, which is also quite significant in Switzerland. It's 35%. And this is quite clear that staking rewards are not taxable for withholding tax, which is again not the case for other, specifically European countries, for example, Italy. So for Italy, on the contrary, they treat staking rewards as a taxable income for withholding tax, and of course it can affect significantly the cash flow. Stamp duties, they have very limited application for this kind of sector, but if we are dealing with debt tokens, which basically represent the claim, on secondary market, this can be and should be paid and also considered. So because debt tokens, they are treated for both financial law and from tax purposes treated as securities. That's why all the transactions on the secondary market, basically they are subject to stamp duty. But what I also wanted to mention for Web3 projects founders, which is often overlooked, is the way how tokens are distributed. And here, for example, dealing with airdrops, sometimes the founders, they don't really consider that airdrops is also a taxable event at the level of the tokens recipient. And also tokens distribution to employees or key project contributors, also depending on the relationship and the functions provided, if it's an employee receiving tokens, also these tokens should be correctly booked and recorded in the salary certificate with potential security, social security, booking and payments. And this also can, what is the trick part on this thing, it can be the situation that the tokens there should be booked at the fair market value. And this can result to the case then the tokens received by employee can be disproportionate to the salary received by this employee. But again, the beauty, I think, of Switzerland is the fact that we can often ask for tax rulings. And some specific cases, they can be explained and some clarity can be provided in advance with the tax authority. I think this is a strong advantage of Switzerland.
Definitely. So maybe for you, certainly to remind is there are kind of two main categories of taxes. So income tax, that's the one that you all know, where you file your own tax return, right? So there the local tax authorities are responsible. So in Zug, the Zug authorities, in Zurich, the Zurich authorities. So you have there different authorities in each canton. For the transactional taxes, like VAT, withholding tax, stamp duty, these are federal taxes, so there you always talk to the federal tax authorities in Bern. So these are different authorities, and because these are transactional taxes, they're only due if you do specific transactions. So now talking about authorities and how you deal with them, Allison, you moved originally from the US to Switzerland. So what's your kind of personal experience here with tax topics and dealing with authorities in the US and Switzerland?
Yeah, absolutely. Thank you for the question. And it's an important one. And I didn't coin this phrase, but there's a definite cultural difference that I feel between Switzerland and the US. In Switzerland, especially in Zug, both personally and professionally, acting in my capacity as the CFO of the foundation, when I talk with the tax authorities, they see me as a client. They're open, I pick up the phone, I call them, and you made a very good point. Nobody's looking for tax avoidance, but tax clarity is important. And when I need a clear answer, I can talk directly to the authorities and they treat me as a partner. Unfortunately, in the US, and I'm very happy to be American, but in the US, the tax authorities tend to view you as a criminal, even if you can get somebody on the phone to answer a question, which is incredibly difficult. And these things matter to a Swiss foundation. I mean, our foundation had a choice of where to be located, and the culture of viewing foundations as partners from the authorities is incredibly important. And I mean, I should say too, the other factor that's important when thinking about a location when it comes to Switzerland is the expertise that's available. So not only do the authorities talk to you, they value you, the authorities themselves understand blockchain to a far greater degree than in the US, but then look at the panel as a perfect example here of what we have in Switzerland. MME, I mean, we're benefit from Thomas's experience, no doubt, but for those of you who may have forgotten or not known, why was the Ethereum Foundation built in Zug? Because of regulatory clarity and MME's support to navigate that landscape for a blockchain foundation. The Crypto Valley Association, it's a fantastic member-based body that brings together all kinds of expertise to both lobby on our behalf and help us to share expertise with each other. And then Sygnum Bank is a licensed by FINMA regulated Swiss bank that deals with cryptocurrency assets. And I know you've been a big part of making that happen. In the US, unfortunately, the issue has become so politicized that it's hard to get regulatory clarity. And the US bank regulator is still trying to clarify what the position is for banks in the US. So I know I've gotten a little far afield from the topic of tax, but the point is tax specifically, but even more broadly, when blockchain foundations have a choice of where to locate, there are so many advantages in Switzerland, and the work that's been done to clarify what the VAT position is for Swiss foundations that deal with blockchain assets is a huge advantage. And we're not seen as criminals. I mean, that's an advantage too.
Yeah, that's true.
And as you said, I think it's very important that also in Switzerland we have this competition between the different cantons, so there is kind of a certain pressure that they come to good conclusions. And especially here in Zug, the knowledge of the tax authorities is very high, so if you have a very specific question, most probably they have already seen it or already discussed it. And similarly on the federal tax authority side, they do a very good job in educating themselves and trying to be up to date. Yeah, and there was kind of an example now during the last year. Actually, we started 1 year ago at the Crypto Valley conference, kind of gathering an industry group of Web3 foundations, especially because there have been some uncertainties about VAT treatment of the foundations, and it was quite a quite a process to discuss with the relevant people in the authority these topics, but today we can, we have a very good result, and everyone can live with what is now the practice, and that was a very successful year. Maybe we jump to other topics if we stay with VAT. So you already mentioned kind of the token qualification. Maybe you can just highlight the kind of the basics of what the current practice actually is.
Well, I think what is important also for talking about VAT is, again, this case law that has happened in Switzerland in 2023 on staking, which provided clarity on treatment of staking rewards. And what was confirmed by the court is that the only transaction fee is supposed to be taxable for VAT purposes, and also we are talking about the Swiss VAT. And here, as always, VAT is a kind of client-based approach, so where the client is located, and here it's important to see if the delegator is based in Switzerland or abroad. Although if the delegator is based abroad, then the VAT in this country should be considered the jurisdiction where the client is located, where the law of this jurisdiction should be considered. And another important thing is if the company is acting as a validator, that means running its own node, or acting as a delegator and basically provide staking as a service, which is a little bit different, and in this context, only the reward for delegation will be also taxable event and subject to VAT. And here, what is interesting to mention, like the banks providing staking, banks are, as financial institutions, they're exempt from they don't provide VATable activity. They're exempt from VAT, but for staking, this is a different type of income, and even though the staking would be provided, no matter if they acting as a validator or delegator, this activity should be VATable, and the banks also or financial institutions should be registered for VAT and and pay VAT. But maybe Guido also
maybe
comment.
Guido, you can provide a little bit info from the practice. So what does this mean for you in setting up staking activities?
Yeah, I think that's really a topic which goes into both directions as well, where what we have experienced now over the last couple of years by setting up staking as well, because I think staking as such is a brand new business also for the banking environment as such. So most of the time when you look at new products, then you have something comparable in the traditional world already, where you probably then can see how the tax will be applied for such new products. But that wasn't the case actually on the staking side. And what we have learned now over the last 2 years, where we had an intensive exchange with the tax authority as well, that it makes most sense, obviously, that you look at each individual case, because as Olga has highlighted, you can act as a validator directly, you can be a delegator itself as well, and the treatment is every time completely different. So you can't just have one solution in the way, and then whatever you're going to do, whether you apply a staking on ETH, whether you do staking on any other token, the treatment will be exactly the same. So what we have done, obviously, to ensure that we adhere to all the rules, because we also experienced a first audit on VAT, which was quite interesting as well, because you have the uncertainty in the market. We have done somehow a greenfield approach for all the staking which we currently offering, and that's around 5 to 6 tokens at the moment, and we categorize them into different pots in the way, do we talk about non-custodial staking? That means where we act as a validator, but the staker itself is not a direct client of us, so we will provide the node, and those non-custodial clients stake through us, or is it actually a direct client of us, so where we're talking about the custodial staking, where it then comes obviously implications in a way, is the client domiciled in Switzerland, where do we provide this node? Is that out of Switzerland, which then has a VAT implication? Can we run the node out of somewhere else? And by running the node also means obviously, is there any substance? Because most of the work is, or if we look at first at the servers, they are most of the time run somewhere in the world. But who maintains the servers? Who does all the other activities behind that one? Is that done out of Switzerland or done from abroad? And so we really have done that for each single token, and we came up with, I think, 5 different buckets now, which we have submitted to the tax authorities itself to get that ruled, so that we can say whatever we do in the future for each new single token, we can put that either into one of these buckets in the way, as I said, are we obviously running our own node? Do we obviously delegate that? Are we just a door opener for a client who runs then through a third-party node as well? So into which bucket that really goes, and what does that mean from a tax authority and a tax treatment perspective as well? Even that we were not successful, I think, with the first submission, how we thought the whole treatment and especially the treatment from a tax authority looked like. I think that goes really back that we are somehow seen as a client as well. So we have been able to go back to tax authorities and explain to them as well that we do not really agree to all their assessment. And what turned out as well, that they were really open to discuss that one and even agreed to say, look, I think we had a different understanding, but now through all the workshops which we did or further explanations, they got a better insight and have seen the cases from a different side as well. Hence, they were also willing to change their opinion, and probably not like in the States, once you have taken a statement and it's like this, so once the box is ticked, I think that's slightly different in Switzerland. And that's I think a really good experience which we have seen, because the whole VAT treatment doesn't obviously just impact us as a legal entity, it also impacts the client directly of us. So when we talk about clients of us, now really the ones which are onboarded, and there you have to distinguish as well. I mean, are you going to apply something which is probably in the best interest of the company but has a disadvantage of the client? So you cannot just run a one-sided view of all that tax questions. So we had to look at from a far wider perspective, and even had to implement now solutions where you must say it's in clear favor of the client. It may be a bit a disadvantage for the bank itself, because as being a bank as well, it's not as easy as for many other companies on the input tax, where you can easily reclaim 100% of the income tax, whatever you generate through staking as well. So we have to apply a banking key, which obviously increases our tax burden, because as Olga said as well, we have many non-vettable transactions, so that reduces the return on input tax. And there, yeah, you have to go, I think most of the time as well, in the best interest of the client. But overall, I think just from a practice perspective, I really can say staking as a whole is, from a VAT perspective, rather difficult. I think it's important that you really start from scratch and not saying, okay, now we have one initiative, let's run it like this, because probably in 6 months or in 12 months you still have the same project, but view it slightly different, and that the impact again is from a tax perspective different. So you would have to go back to tax authorities again and refile, which makes it far more difficult. even, as I said, tax authorities are really open as well to obviously change their opinion or even listen to your arguments if you have changed the setup or any views on that one as well. So overall, just to close on that note, I think VAT is a challenging item from a corporate perspective, especially in the financial world, not for the illegal entity as well, but also for private individuals. But the tax authorities are really open to serve that in the best interest of the country as well, obviously, to make Switzerland an interesting country for such business and to support that one as well.
Yeah, I think that the main issue of VAT is that you don't pay it on the net profit, you pay it on your turnover. So depending on the numbers, that can be quite a substantial amount. And if you have a wrong qualification and the tax authorities go back 5 years, that can add up to very substantial amounts. And I think the main learning as well here was you need to understand your own business. You need to understand your technology and the implementation, and then you can educate the authorities and come to certain conclusions how these transactions are treated. And again, then maybe in addition, you need to take into account the legal relationships, who is acting in its own name or on behalf of customers, are you acting in the client's name and on their account, etc. So depending on the legal relationship, again, the treatment can be completely different. And that's why you really need to know the details before you do qualifications. Maybe the last topic was token qualification. I mean, you know payment, utility, asset tokens. To make it short, utility tokens are subject to VAT, again on the turnover, 8.1%. Payment tokens are not subject to VAT. So now there was a certain advantage to qualify a token as a utility token, because then foundations selling such tokens have a taxable activity and are able to reclaim VAT. But then on secondary market, where Guido, the bank, comes in, what was the issue then on your side?
I think the big challenge we had and we have there as well is that obviously then you have to, or the client gets penalized with this 8.1% of VAT on the underlying transaction. So if you obviously trade a 1 million ETH transaction through us, and this token would be treated as a proper utility token, so then such a transaction will cost you obviously 1,081,000 francs. So if you buy and sell, so you already can see that's 160,000 francs of VAT charge, which means just if you hold that one not because you believe into the utility or on the blockchain itself, but rather trade that one, that such a token just have to increase by 16% just to get flat out, even if you ignore the fees itself. So that obviously created a lot of discussions on our side as well, also in respect then of the tax authorities, because it was key for us really to understand how such tokens are treated, not that we fall into this VAT item where the business would be clearly gone, because if a client based in Switzerland trades that abroad, then of course he would not pay that 8.1%, which would be a clear disadvantage for the financial market. So I think there as well, as I have outlined before, there was an audit on our side as well. There's far more clarity out there, and it's the tax authority understand, I think, much better as well the utilities behind that one, what certain tokens obviously provide and what they do in the background. So that you probably could say most of the tokens out there which are currently traded, bought and sold from the different banks are treated as payment tokens, even that as such they are utility tokens from a tax perspective, but with an undefined utility itself, which clearly
I
helps.
think that's very important. So you have the FINMA qualification that doesn't need to match with the tax qualification. Most probably this is for you the same.
That's exactly the point I was going to make. The sophistication of the regulatory environment here, that you can have a different classification from FINMA from a securities perspective versus from the tax perspective is a huge advantage.
And I think that to make it again short, most of the native tokens, protocol tokens, are not taxable VAT utilities. They are treated as payment tokens from a VAT perspective. So if you trade, you don't pay VAT on that. And that's it, actually. So time is up. Thank you very much for this interesting view. And